Welcome back to the channel. Hope you're all doing well. It is Thursday, March 12th today. Before I get started with the news, I just want to remind you that if you like the content that I'm making, the daily wrap-ups and then also the longer form content that I post on the channel once in a while, please hit the like button, subscribe, like the videos, do all that good stuff, because every little bit helps. So if you haven't already subscribed to the channel, please do subscribe, please like the videos, and yeah, that's it. That's my little advertising spiel for the day. So let's get into the news. The market's just wrapped up, and if you've been watching the news at all or this channel for the last couple weeks, today felt kind of inevitable based on what's been happening in the world. The Dow dropped 739 points, its worst single-day loss of the year, closing at 46,667. The S&P 500 fell 1.52% to settle at 6,662, and the Nasdaq got hit the hardest, shedding 1.78% to end at 22,311. All three of these indexes just closed at their lowest levels since November. I personally made money today because I bought put options on the SPY, IWM, and Intel. This is more proof that anyone can make money trading options in any market condition as long as they actually know what to look for. In fact, even though many people consider options trading to be dangerous and risky, when you actually know what you're doing, you can offset any hits you might take in your investment portfolio. I have long-term investments that I never touch. Obviously, those investments got hit hard today, but I offset any losses in a long-term investment account with my options day trading. So back to the Dow and its bleak numbers. The Dow hasn't closed below 47,000 all year until today. So what broke the dam? What else? War and oil. Once again, you can thank the governments of the United States and Israel for launching these offensive attacks that are upending global markets and, much more importantly, killing at least 7 U.S. service members and more than 1,300 civilians, including 168 children at a school. West Texas Intermediate crude just settled at $95.73 a barrel, a nearly 10% single-day surge. Brent crude crossed $100 for the first time since August of 2022. And here's one of the reasons that number matters. When oil crosses $100, it doesn't just hurt at the pump, it becomes a macro problem. It feeds inflation, it pressures margins, and it forces the Fed's hand in the worst possible direction. The catalyst was Iran's new supreme leader, appointed just days ago on March 9th, publicly declaring that the Strait of Hormuz should remain closed as, and I'm quoting here, a tool to pressure the enemy. Overnight, 3 more foreign vessels were struck in the Persian Gulf. A container ship took a projectile hit less than 35 nautical miles from Jebel Ali, one of the busiest ports in the world, sitting right outside Dubai. Earlier this week, the IEA tried to calm the markets by releasing 400 million barrels from strategic reserves. That's more than double the volume released after Russia invaded Ukraine in 2022. It didn't work. Oil ripped higher anyway. Energy Secretary Chris Wright, remember this guy with the tweet and delete a couple days ago? So Chris Wright confirmed this morning that the U.S. Navy is not yet ready to escort tankers through the strait. He said it'll happen relatively soon. Who knows what that means? But markets don't trade on relatively soon. They trade on right now. So right now, here's where it gets dangerous. This morning's jobless claims came in at 213,000, which is below expectations, meaning the labor market is still holding firm. On a normal day, that would be a green flag, but today it was a trap, because a strong labor market gives the Fed zero room to cut rates, and in a world where oil is near $100, that's stagflation math. Slow growth rising prices, no relief from the Fed. That's the cocktail Wall Street is trying to swallow right now, and it's why the financial sector got absolutely hammered. Morgan Stanley sank 4%. Goldman Sachs fell nearly 4%. Caterpillar and Boeing both dropped close to 3%. And making it worse, both Morgan Stanley and Cliffwater became the latest firms to cap withdrawals from private credit funds, a signal that bad loan concerns are starting to bleed into the cracks of the financial system. The market did bounce off the lows today, but it couldn't hold. Buyers stepped in, then sellers stepped back in harder. That pattern of trying to rally and then failing to hold is the fingerprint of a market that doesn't yet believe the bottom is actually here. So what should you be watching right now? Adobe reports earnings after the bell tonight. The stock closed flat, which tells you the options market sees this as a coin flip. Tomorrow's 30-year Treasury bond auction could move yields. And of course, every headline out of the Persian Gulf is now a live market event. So, as I've been saying for the last couple weeks, it's wild times in the market, radical up and down swings every single day. But just because things have been going lower more often than not, doesn't mean you can't make money in this market, just as I've shown you day after day. So that's it for today. Until tomorrow, have a good evening, and see you back here tomorrow afternoon. Take care, everybody.